Hey everyone, Daniel Kurkowski from VSM Commercial and Minnesota Deals here with the Caspian boys. We got Rafiq Moore, we got Mike Sowers. Today, Mike is going to tell you about how he got involved in his first commercial real estate investment, turned a building from a $700,000 building to $1.1, $1.2 million in 3 months of work in commercial real estate. Hi everyone, how's it going? This is Daniel Kurkowski from VSM Commercial here for the 7th Minnesota Deals podcast. I'm joined today by Rafiq Moore from Caspian Group.
What's up, everybody?
Also joining us, front and center, Mike Sowers, also with Caspian Group.
Hello.
And today we're going to talk about the first commercial deal. First, that you did?
Yes.
As a principal?
First.
That Mike did investing, comes from a residential background, made the transition into the deep water of commercial real estate, and never looked back, right?
That's right.
So
first, one-way ticket.
Yes. So first off, before we get into too much detail, how do you guys know each other? How did you connect?
You start.
Online. Facebook.com.
No, right? Social media works.
Yeah, it does. Actually, I met Rafiq. I was interviewing a lot of different movers and shakers, trying to figure out kind of what my next career was going to be.
Coming from?
I had a remodeling company that I managed for 10 years. I also was doing some residential part-time house flipping, some rentals and things like that.
Okay.
And I had always been attracted to commercial. It was really the only other career that I looked at prior to starting executive remodeling. And it kind of came around full circle. Somebody made me an offer on that to sell that company,
on the business.
which freed up my time. And so I was looking at other business opportunities, and I said, hey, meet with a bunch of entrepreneurs. I looked at business brokerage, and I came back to commercial real estate.
Perfect.
And since I had been doing residential, there's always that kind of, it's a very mysterious realm, the commercial real estate thing.
No question.
And I find that most people that are in residential are afraid to get into commercial, and I was one of them because I didn't know enough about it. And so we tend to be afraid of things that we don't know much about. We fear the unknown.
Especially when it can cost you a lot of money.
Yes, exactly.
Big mistakes.
Yeah.
So I actually put a post out on Facebook to see who are the people that I should meet with, and then I got referrals from my friends. So somebody recommended that I sit down with Rafiq. And we hit it off right off the bat. He's an avid book reader, constantly learning. And so we were talking about books. He was like, hey, have you read this one, that one? We also both went to Carlson. And he was one of the very only people that I met with that looked at me as a potential partner. And I saw the success that he had, and I don't know if he saw a little bit of himself in me and said, hey, here's a guy who I can use on the team to help me with some areas, business processes, and he said he'll teach me everything he knows about commercial real estate.
Yep.
And now I've extracted 1% of his knowledge.
No, hold on a minute. There's not a lot left that you don't know. However, we did extract a deal. That was what I was working on, the 20,000 square foot warehouse building, and this deal was sort of it stalled in negotiations. And with us having a lot of stuff going on, I said, Mike, go back. Let's get together with the seller and his realtor. Let's meet with them for lunch, and let's see if we can reignite that deal and really put that deal back on the table. And he was really good at tenaciously pursuing that deal. And ultimately, we ended up buying a 20,000 square foot building together, creating substantial amount of cash flow and value. Thank you very much. And that was a pretty successful deal for us right out the gate.
Yeah. Sure. So let's start from the. How'd you find the deal? How did it come to you? What made it stick out? Because that's, I think, what most people looking to get started investing, both sides, struggle with.
Well, first of all, the key difference between commercial real estate investing and residential is that in commercial, we tend to primarily use an income-based approach to valuing a property versus a comparable sales approach.
Right.
Now, there's 3 approaches you can use. Comparable sales, which is primarily used in residential. We do comparable sales and income approach in commercial. And then the third approach would be like a cost value, right? What's the cost for the land, replacement cost value? Those generally aren't used unless it's a specialty property like a church or something, right?
Right.
So what really attracted me on that deal is saying, all right, the net operating income, all income minus expenses on day one, and this is a full building, was $70,000.
Wow.
So we say, all right, right now we can buy properties at 10 to 12 times the net operating income. And if we can increase the net operating income by 30%, there's a deal there.
And the value goes up.
Right? So let's just make this super simple. All you need to do to be successful doing value add type properties, and this one's a perfect example, is find buildings that have vacancy that you can fill or have under market rate rents. You can therefore create value by increasing the income or decreasing the expenses. And we can go through different strategies for doing that. On this particular deal, the going in income on day one was $70,000 per year.
Right.
We ended up taking that building down for $700,000.
Which is a 10 cap.
So
Makes sense.
that's a 10% cap rate or a multiple of 10. It's just two different ways to arrive at the price.
Yeah.
Okay. Since then, we've renegotiated the leases. We now have a current net operating income of around $110,000.
Okay.
Okay. The value of that building, assuming a 10 cap, would be around $1.1 million right now.
Right.
I think properties in that market are trading, would you say probably a safer bet would be like a 9 cap even?
8 to 9 cap, I think, is reasonable. But the other thing that is very important to notate, on that street, certain properties or some properties sold at $100 a square foot.
Yeah.
Right.
Our property, 20,000 square foot property with offices in the front or retail and garage bays in the back, we bought it at substantially lower, $37.
$37 a square foot.
So even if we doubled it to $70 a foot,
Yeah.
we're still below the comparable prices.
Yes.
And our NOI looks, so I think it's worth $1.2 million all day long, plus there's a way to escalate that income over time.
Would you say that it's fair to, because when we're talking about it, because you just hit the difference between the comparable sale comparable approach and the cost approach, right? What kind of income?
So how do you know? How do you know which one to use to evaluate a building?
Well, let me ask you this question, right? So the question is, when you're looking at space like this, commercial space in particular, does it matter who the buyer is? Does it matter if it's an investor versus an owner user for a building for how you want to evaluate the building itself?
Typically, owner users pay a slightly higher price per square foot because when owner user buys a property, their income approach sort of goes out the window because they're going to utilize the property for their use.
Right.
So whenever they post a property that's empty for sale and they say the great owner user opportunity, they're basically telling all the investors to go away.
There's no income here.
Not selling you the deal at a discount.
Right.
And right now it's very often that you see $80 to $100 a foot in industrial space, which is really high considering. Just 5 years ago, average price per square foot in the industrial realm in Twin Cities was about $50.
Wow. So if I'm a seller, and I have a vacant building, I want to use the comparable sales approach.
Sure.
That's going to be more advantageous for me
absolutely.
in that instance, right?
Yeah.
So when you're looking at it and you're looking at this building now, you've identified it as, hey, these are under rented, which means, and it's also a good value per square foot. There's two different metrics telling you this deal is interesting.
Yep.
So I don't see was it fully occupied?
It was.
So that I think is the big question.
So
how do you do anything about that?
So that's the key here, okay? When people looked at this building, hey, it's fully occupied, it's got an NOI of $70,000 going in, okay? People look at that, well, there's no opportunity to add value because there's no vacancies.
Right.
Okay, so people were thinking short term. We underwrote the property and realized that people were paying a gross average rent of $5 gross.
Yeah,
$5.75 per square
What is
foot.
gross versus net?
Okay, so gross
All in.
It's based on the lease. A gross rent is going to be the total monthly payments, but that would include taxes, insurance, and all that are going to be paid by the landlord.
Included at $5.
So, yep.
Right.
So a gross lease would be like, hey, you pay $3,000 plus utilities. The landlord covers all operating expenses. Operating expenses in this case, the big ones: property taxes, insurance. And then all other operating costs get dropped into one bucket. That includes maintenance, property management, accounting, any utilities on vacant units. All of those are additional operating expenses. So then you may have heard the term. Can we demystify what a triple net lease is?
Please do, because I see that term misused constantly.
Always. One of the first things I did when I got into commercial real estate is got educated on the terms. Because I feel like a lot of these terms are thrown around at these cocktail parties in an attempt to make people who don't know what they're talking about confused and embarrassed. And, you know, the reason a lot of people don't get into commercial is because most of the people in the commercial space, it's like a good old boys club, right?
Yeah, well, there's
Keep the cards like this.
There's less material literature, and you can't go to Zillow for commercial real estate.
Nobody wants to show the secrets. That's what we're trying to do here, is give the average person the information to see that this is not that difficult to do.
Because if I can do it.
I see where you're going.
We want to share the secrets.
So in the first 3 months, we were able to buy a building for $700,000, systematically renegotiate the leases, and create an additional value of around $400,000 on the
How do you
deal.
do that, though? How do you get in? So people have leases. I'm assuming they're not month-to-month leases. Like
No, these are leases, and it's really a strategy of, let's not do what's best for me.
Let's do it best
What
for
do
the
you
tenants.
want?
Right.
If you're a tenant and you're in a building that's been mismanaged for a long time and there's deferred maintenance and you've had a kind of absentee owner, if you will,
Yeah. You got problems.
is there maybe some build outs that you want to do?
And that's
For sure.
where we offered every tenant, most tenants, an opportunity to improve their space, and thereby we were able to renegotiate the lease with the better terms for them and for us. Well, for both parties. So with the new improvements, they got value out of it, and we increased our net operating income.
Yeah.
Interviews.
So
Ask people what they want.
and interviews. That's a good point.
So
What does that process look like? That's
so
in due diligence, right?
First, in due diligence, as soon as I have a signed contract, I mail all the tenants a questionnaire. And it says, hey, tell me all the things that are wrong with the property that
They'll tell you.
the landlord doesn't know
They
about.
want to tell you, yeah.
What are all the things you want to see improved in the property? And as your potential new partner, how can we improve the building in a way that's going to help your business thrive and succeed? Can I do a map report of your space for free using our technology and give a 3D walkthrough of your showroom to you as part of a value add solution package? That may be good for one guy, it's not good for the next guy.
Can I increase the space that you have to accommodate
Do you
your
want
needs?
more or
and
less
move
space?
people around, and that's what we did also. We gave people more space.
Yep.
It served them better, and that's how it kind of helped.
So did you have some holdouts? That's my question.
Yeah, absolutely.
have a
we got holdouts. So, like, at the end of the day, we basically went to everybody and figured out who are the people that want to play ball. Hey, your lease is up in a year. You want $10,000. You know the market rate's $8.50 to $10 a square foot. You're paying $6. It's gonna go to $8.50 in a year. How about we do some of these things? I lock you in on a new 3-year lease at say $8.
Okay.
And it's good for you. You lock in a below market rate for a long time, and we're going to
Still a good
develop
rate,
a
yeah.
partnership. And that's kind of the process. You know,
being
you
genuine and
never
helping people.
want to
Yeah.
do any kind of business dealing that's one-sided.
No, never.
And if you look at every deal, like Zig Ziglar said, you help enough other people get what they want, and you'll have everything that you need. And so that's how we look at those deals. It's not we're going to go in and strong arm them and pin their arm behind their back and say sign a new 3-year lease and we're going to raise your rent now. We're going to honor every single promise that we walked into on those leases.
Yeah.
But if you want to, and it's your option, renegotiate for more or less space, slightly different rates. Can we do some tenant improvements and bake that into the lease cost? And maybe extend you out at a little bit below market rate. Now that's good for everybody. And so that was our strategy there. I never thought about it like that until Rafik brought me the idea. He's like, dude, just renegotiate the leases at this, that.
He's
and
like,
I'm
why would they
dude,
do
you're
it?
a genius, because I'm thinking in my head, it's going to take 2-3 years for all these leases to roll over to increase the value of this building. And here we are. We closed March. What did we close? March 15th?
I don't recall the exact date.
We closed March 15th. We've owned the building for a month, and we've already created about $400,000 in value.
Essentially, this building will be worth $1.3 million, so it will be about $500,000 of value we created over the next year or so. And we will refinance and recharge our, get our equity out and do more deals.
And eventually your holdouts too. There's some additional value coming in because those leases will expire and you have the opportunity to lease it to them at a higher rate or
and all the while we're going to enjoy some sort of a cash flow. Both of us as partners in the deal will get distributions monthly, and so we're blessed to have the deal and blessed to have you as a partner, Michael. Welcome on the team.
I'm excited.
Thank you very much.
Yeah.
I got one last question, and it's the first question I asked still, and we never really got to it. How did you find the deal? Who told you about the deal?
Well, if we told you that, we'd have to kill you.
No.
It's worth the risk. It's worth the risk.
I found the deal on Facebook, believe it or not, of all the places.
There it is.
One of those places where people advertise.
Yeah.
This young lady posted it. I remember it was 3 o'clock in the morning. I woke up and she's talking about this property on a national site, on a national Facebook group. But it was right here in Minnesota. So I reached out to her and I said, hey, I'm interested. I'd like to talk to you. I think they were selling it for $875. Mm-hmm. We looked at the property and, I offered her $700,000. At first, she didn't want to take the price. She held out at $800,000, and Mike used his charm to drop the price to $700,000.
Well, what happened?
Team effort.
I think originally we got under contract to $800,000 because the NOI was stated at like 85, and then we did due diligence and found out it was really like 45.
Oh.
And then we did some stuff and reworked some of the leases. So by the time we closed on it, it was already to 70.
Yeah.
But we've increased it from there. But I think part of the challenge is that most of the marketing material that you see is an agent's pro forma of what the property could do.
Versus what it does
and here's the sad reality, is that people think their property is valued based on what it can do. And it's not. And we'll never... We're not stealing people's properties. There's a big myth out there that, hey, you're stealing their equity. No, it's worth $700 on the day we bought it. We added value by increasing the value that we're providing to the tenants.
Right.
And in return, they're providing us with additional.
And it's understanding of how the formula works, understanding of how the inner workings of commercial real estate works, allowed us to create that value. And the value is created not in our heads.
Right.
It's by the appraisals, in the bankers' minds. And if we list this property on the market with all the new leases, with all the cleaned up units, with all the happy tenants, pretty positive that we'll be able to sell it today for $1.2 million.
Yeah.
So value is truly created, and the secret sauce is in the putting all these pieces together and creating value. And so in conclusion, I wanted to ask the audience, and I want hopefully people to comment. Me and Mike were talking about it. We want to host an evening, like a conference.
Yeah.
Investor series.
And talk about conversion of residential investors or residential real estate people who have investor mindset into looking at commercial real estate, because I think if we share our message and if we teach people how to do it, we will all benefit from it in the Zig Ziglar style. Mm-hmm. So I'd like to see if anybody would comment and see if they would like for us to host one of those events. We could host it at our office on Thursday, maybe host 60 to 100 people, and see if there's any interest. What do you think about that?
Worked on me. Your message certainly made a big impact on me. So I think that'd be a really fun event. Mike, thanks so much for being on the podcast, for sharing your story. It's just such clear evidence of, sure, Mike is a very smart guy and
come on.
has the right mindset and approach to business where he's looking at putting others above himself. But on top of that, in 3 months, you were able to accumulate all of the knowledge, and that's hard work. But you worked hard, you learned a lot about the markets, so you saw the opportunities that potentially existed. But 3 months is not a long time to be able to do a deal where you're turning 700,000 into 1.1 million, 1.2 million. So that's very impressive, and I hope some people out there were inspired by hearing your story.
Thank you. It's not difficult to do, and I think if you come to that seminar, we can further demystify that process for anybody interested.
Yeah, thanks for being here, guys. Thanks for watching.
Thank you. All right.